the use of the inventory worksheet. So not only are we going to practice journalizing our purchases, we're going to practice journalizing our sales, and we're going to practice utilizing and how the inventory worksheet fits in all of this stuff, okay? And this is a this is like a pre-step to looking at how we actually, when we reach our class project, how we actually look at a transaction, journalize it, do what it needs to be done, and complete the transaction, okay? So here for chapter 5 and 6, periodic inventory, purchases and sales. Example or exercise here. Here is the assumption that your inventory method is periodic and it is LIFO. Okay, assume that sales tax is 8.25%. So let's go ahead and start with the first scenario here on May 1st. May 1st, we purchased a total of 500 brown mugs at $2.65 each. Freight cost you $100, and it was on an account 4 from Cuppy's Co., and you were given terms of 5%, 15, net 30. So, how am I going to journalize this transaction right here? So yes, we're going to recognize that because we're dealing with periodic inventory, we have a purchase expense. So let me bring that up here. So 5.1, we got a purchase expense. Okay, what else are we also looking at?
Freight expense.
We're also looking at freight expense. Good. Okay, and what else do we know? What was a given piece of information that we know that, how did we pay for it?
Accounts payable.
We placed it on an account with Cuppy's Co. Yes, we did. So I'm going to go ahead and place it here. Okay, so if I purchased, let's see, a total of 500 brown mugs at $2.65 each, and my freight was $100. So what am I going to be determining for my purchase expense and my freight expense and my total amount that I am actually...
13.25.
Okay, hold on. Let me look at that again. So I purchased a total of 500 brown mugs at $2.50 each. So 500 times 265. I get 13.25. Excuse me. Okay. How much was my freight again? $100. So therefore, my total accounts payable that I owe is going to be
$14.25.
$14.25. And I'm going to go ahead and write here that this was, I bought this from Cuppy's Co. Okay, how many items did I buy? I bought 500. What was my specific items?
Brown mugs.
Mugs, okay, at $2.65 each. And what were my terms that I were given?
5%, 15, net 30.
5%, 15, 5%, 15, net 30. So that means at least I'm indicating that I have terms, okay? So good, that's how you journalize it. Now, next step is we're gonna go to our inventory worksheet, okay? So on May 1st, we purchased 500 units at $2.65 each, which we know to be $13.25. Okay. And freight was $100, so therefore my total here was $14.25. Now, what method am I using to calculate this? We're doing LIFO. So do we care to to calculate the cost per item?
No.
Yes. Yes, this isn't weighted average. We do care.
Oh yeah.
Yes, because we have to remember what came first and what came last. Okay, so here, what is going to be my cost per item here? 2.85, even. Okay, so I'm going to go ahead and extend it so then the next time we see our information, we can see if it does change. Okay, good. All right, let's see what happened to scenario number 2. So then on May 5th, you end up returning 15 broken mugs for a full refund. Okay. We're going to do purchase returns and allowances. Okay, good. So here on May 5th. Now, is that the first thing that we're going to recognize is our purchase returns and allowances?
Can you repeat the question, please?
Is that going to be the first thing that we recognize when we're dealing this, so that we're going to the first account we're going to look at is purchase returns and allowances?
No.
No. What's actually going to come first? We are returning items for a full refund.
Purchase expense.
We have to do inventory first, right?
You can do inventory first. Did you want to do inventory first and then the journal after?
Yeah, I'm okay with that.
Irina says that we're going to do the inventory worksheet first. So how many items did we return? We returned 15 of them, right? How much did it cost me?
$2.65.
$2.65. So what's my total that I am going to get refunded for? $39.75. Okay. Now let's go back to my journal. What accounts am I going to recognize first? Did you say what was that? Sales? Did you say sales returns? Anybody? How am I going to record a return? Purchase returns and allowances, but that's not the first account I'm going to recognize. How did I pay for the items? On accounts payable. So how do I reverse accounts payable?
Accounts receivable.
No. Okay, let me ask that question again. If I'm paying for something, right, or if I owe money, right, if I'm getting a refund, what am I going to essentially be doing? If I'm doing a purchase returns and allowances, and I paid for the items on an account, what do I need to adjust here? How am I going to, what am I going to recognize first?
Accounts payable.
Accounts payable. You have to reduce it. You're getting money back. Yes, accounts payable. Right? How did we pay for our items? We paid it on an accounts payable. If I'm returning items, what's my first thing I'm going to recognize? I'll have to lower the amount that I owe. Okay, and then now we can now recognize our purchase returns and allowances. Remember, a purchase returns and allowance is a contra account. If it's a contra account, okay, I can't get my and to go through. Purchase returns and allowances. If this is a contra account, what do we know? It's supposed to decrease our main account, which is our purchase expense. So in this case, it needs to flow in the opposite direction. So, and we solved for it. It was $13.75, or $39.75. So let me grab that piece of information. So $39.75 is what we're going to be refunded for. Okay. So here, I'm going to make a note here that I returned $15 for full refund. Okay. All right. Is everyone okay? Everyone's clear here.
Yes.
Okay. So then on the same day, you also sold 10 mugs at $9.99 for cash. Okay.
Debit.
Cash. Debit cash.
So we're going to debit cash.
And then credit sales.
Okay, so 5 again. So we're going to debit cash because that's what we got. We received cash. We're going to credit sales. What else are we also going to do?
Sales tax payment.
Yes, we also have to recognize that there's tax also included. Okay, so how much is my sales going to be?
$99.90.
Okay, and how much is my tax going to be?
$8.24.
$8.24. So therefore, what is my total cash I'm actually going to be receiving?
$108.14.
108.14. And here I'm going to go ahead and say that I sold 10 mugs. Okay. Done. All right. Now, does this affect my inventory worksheet? Okay. Does my sales affect my inventory worksheet? Yes. Okay. Because I was going to say, it's a 50-50 question, 50-50% question, right? You either get it right or wrong. So Nilo says yes. Why? Why do you think sales affects the inventory worksheet? Let's look at the inventory worksheet. Where do we record our sales?
Cost of goods sold.
Cost of goods sold, but do we care? How do we find out what our cost of goods sold is?
Purchases made.
Okay, but when do we know how much cost of goods sold we actually sold? When we find our ending balance. And when do we get our ending balance?
It's given.
It's given, but do you know what your ending balance is right now? No, when do you find out?
At the end of the period?
At the end of a given period. So let me ask you again. Does sales affect your inventory worksheet? No, because you're not calculating the sales. All you're calculating is what is at the end of your inventory at the down in the basement or warehouse. How many actual items do you have? Then you make the assumption that, oh, then I guess I've sold everything else. So in this case, sales does not affect my inventory worksheet. Even when we learned chapter 6, right? When we talked about the sales process itself, did we ever touch the inventory worksheet? Okay. So when we're dealing with periodic inventory, all we need to know is that we only are focused on one thing and one thing only. Our purchases and our inventory on hand. That's it. Do we care about our sales? No. Sales has no effect on the inventory worksheet for periodic inventory. Okay? So now that we figured that one out, so we're done here. We're just journalize the sales and that's it. Okay? So then what has happened here on May 6th? Okay, so you sold another 20 mugs at $9 each, but this time you sold it to customer A on an account and you gave them terms 10%, 10, net 30. So if we sold 20 mugs at $9.99 to customer A on an account, what are you going to recognize? Say that again.
Cash. No, accounts payable.
Accounts payable. Good. We did not receive cash for this transaction. We received, it's actually an accounts payable. I'm sorry, accounts receivable. Because who owes us the money?
Customer.
Yes, the customer owes us the money. So accounts receivable. Okay? And then now what are we actually going to recognize here? What did we actually do?
Give them terms of 10%, 10 or net 30.
Okay? But what had to happen? What was the transaction at hand in order for us to give him these or give this person a discount?
Indicator sales.
Yes. So we've actually sold something to this person. We sold, and what else? Yes, we sold. Yes.
Sales tax.
Okay, sales tax payable. So how much was those 20 mugs cost you? Or what was the total sales for the mugs?
199.80.
Okay. How much taxes on those mugs?
$32.97.
There.
1648.
How did you get 32?
I will check now.
Okay.
Yeah, my mistake, sorry.
No worries. I just want to make sure that you guys get the correct answer. Okay, so what is my total amount that this customer A owes me for?
Two hundred
216.28.
28.
Yes, 216.28. And here, now I'm actually going to make a note here. Sold $20 mugs to customer A. Okay, terms was 10% if he paid in 10 days. If not, the whole thing is due in 30 or 20? It's 30.
30.
Good. Usually it's 30 days. Okay, good. All right. Now again, does my sale affect my inventory worksheet?
No.
No. Good. All right. So then on May 8th, okay, we purchased another 250 mugs at $2.75 each, freight costing you $50. Okay. On an account from Cuppy's Co. And they gave us terms of 5%, 15, net 30. So, how do I journalize this right here? Purchase expense. Good. So, this was on May 8th. Okay, we recognize there's a purchase expense. What else do we also have to recognize?
Freight.
Yes, there was a freight charge. And then what else? How did we purchase these items?
Accounts payable.
Yes, we placed them on an account. Good. So how much was my total purchases for?
687.50.
So 275 times 250, 287.50. How much was my freight?
Freight is 50.
So how much do I owe in grand total?
737.50.
737.50. Good. Okay. And I'm going to go ahead and make a note here that I purchased this from Cuppy's Co. I purchased 250 mugs at $2.75 each. And because it's on an account, I get 5% if I pay within 15 days. If not, it is due in 30. Okay. Okay, so what do I do next? Now that I made a purchase, what do I do next?
Do the inventory sheet.
Yes, now we got to do the inventory worksheet. So on May 8th, we purchased 250 items at $2.75 each with a freight of 50. So again, we solved for this, okay? And we also solved for this. So I'm going to go ahead and pull these numbers down since we're doing it that way. Okay, and then what is my cost per item going to be? What did you say, Nilo?
2.95.
2.95? Okay, good. All right. So let's see what the next scenario is. Okay. So then here on the same day, you end up returning 50 mugs because they were the wrong color. They were black instead of brown. However, Cuppy's Co. offered you a 15% discount and you accept it. Because at the end of the day, you could still sell those black mugs. They're only just a different color. So Cuppy's Co. convinced us to keep our mugs, but they're willing us to give us a 15% discount because they shipped us the wrong order. Okay, so how are we going to recognize this transaction?
Returns, allowances, and discounts.
Okay, now did we actually return any items?
No.
No, because they convinced us to keep it. Now, how much is it going to cost me for the return?
$2.75.
It's going to cost me $2.75 each for the return. However, I'm not getting a full refund. What am I actually getting?
15% discount.
Yes. So if I were to say that again?
$20.63 is my number.
$20.63. Good. So 20.63. Okay. Good. Say that again?
Why is gonna be zero? Because if there is a return, it's gonna be zero on the quantity.
Because did we actually do a refund? Did we actually return the product to the customer? I mean, to the vendor? No. The vendor convinced us to keep the cups. All he did was give us an additional 15% discount because they sent us the wrong item. Okay, so there you go. All right, so how are we going to journalize this transaction?
Returning allowances.
Yes, okay, but that's not what's going to happen first. What do we need to recognize first? Okay, what account are we actually going to recognize first?
Accounts payable.
Accounts payable, because that's how we originally paid for the items. Because we're getting a discount on it, we have to decrease the amount that we owe to this person. So accounts payable. Good. All right, and we already solved for it. It was $20.63. Okay, so therefore I'm going to go ahead and indicate it right here that I returned 50 mugs for 15% discount. Okay. All right. So I'm going to stop here because now we did our inventory worksheet. We did our journal. So I'm going to stop here and we'll continue the rest of the problems at the end when we come back from the break. Okay. So right now it is exactly 9:53. So I'm going to go ahead and call break at 9:55. So I'm going to give you, let's do 15-minute break because this problem is actually pretty long. So please be back no later than 10:10.